our exposure in REITs is actually all outside of China. So that has actually worked pretty well. So it's mainly Singapore and Australia. So those markets have been pretty good, and dividends have been very resilient in recent times. So no issue on that. But an area that has been of concern clearly is China property, and that's something where we have no exposure at this point. And I think looking ahead, I think it's best to be cautious in that area. I mean, there's still a lot of things to work, through the system at this point. And you just look at household debt to GDP, for example, has been rising quite rapidly over the years. I mean, the backdrop is still not that favorable. And you wonder what's going to happen to local governments. So those local governments with weaker economies, how will they navigate this particular issue? Because they do make a lot of money from land sales, for example. And that slowdown in property, especially when state council is saying that we're going to stop short-term funding for working capital, for LGFEs and that kind of thing. There's a lot of things going on. And I think it's just right to be cautious at this point with regards to a number of sectors in China.
Okay. The reason I brought up REITs was because there was an analyst earlier on the show, not today, but a few days ago, who highlighted that C-REITs, China REITs, were seeing some traction, largely because of the exposure they had to infrastructure projects and rewarding infrastructure projects in China. And so does your concern around the property issue also spill over to other sectors, allied sectors that would get impacted, would get wrapped up in this issue?
Yeah, I mean, the Chinese REITs, fairly new concept, are actually not very liquid. I mean, they're quite small names from what I've seen. So we did look at them some time ago, but they didn't really suit what we do. And I think, we need to see them more well-established and larger before they'd be interest to us. But, the one sector that obviously is at risk here is the Chinese banks. And I think that when you look at the total exposure to property, so you include building materials and those kind of things. Then if you look at total Chinese banking assets, it's probably, it's well over 30% in terms of exposure. I've seen some analysis that says it's well above that. So I think, we need to see things stabilize before we start getting to those. And some of these industrials as well, with commodity prices moving up. And obviously, you're all surprised at how many stocks you look at in China actually own property. So stocks that shouldn't be owning property still own a lot of property. So there's always underlying risks in many of these names, and it's worth a close eye, on that as well.